Our next panel is Banking, Currency, and the Financial Markets Crisis, which identifies the current crisis and provides solutions for introducing stability and transparency in Iran's banking system and financial markets. First, please join us in welcoming Dr. Siamak Javadi, Associate Professor of Finance at the University of Texas, Rio Grande Valley, and author of these two papers to present his and IPP's findings and research.
Thank you very much. Good morning, everyone. Your Highness. So let me start the presentation. Before diving into this presentation, I would like to thank Nufti for its support and all the staff and the Crown Prince for his vision that enabled us to work on this project. So here's the overview. Here's the overview of the presentation. I'm going to start with the current situation in Iran, and I will offer some facts. Then I will get to short-term risk and suggested policy recommendation. I'll do the same for long-term, and then at the end, I will offer some long-term recommendations and kind of an overall framework to basically rebuild the banking system and the financial market. So where are we right now? So these facts, these graphs, I should say, kind of summarize the current situation. The root of the problem is on the graph at the top. You can see Iran has been suffering from chronic budget deficit. It's been running in the negative territory for over basically 2 decades. As a result, you can see double-digit inflation basically right after the revolution, and you can see the typical characteristic that high inflation rate is associated with also high fluctuation in inflation. And as a result, you can see that the exchange rate between Iran and the Iranian rial and the US dollar is just going off the roof, and this pattern has been continuing since 1979. So none of this is a surprise to anyone. But on top of that, you can see on the top, you can see the Tehran Stock Exchange has the lowest market capitalization compared to other stock exchanges in the region. On the right panel on the top, you see the stock market capitalization to GDP, and Iran stands at 528%. 528% of the Iranian GDP. That is pretty large. That's there are some debates, there are some criticism to this measure, but given Iran and its economic structure, we know this is a clear signal that the Iran stock market is completely overvalued. It's a bubble, and it's consistent with this pump and dump policy, especially that was revealed during the Rouhani administration. So for instance, you can see in UAE it is at 82%. And then at the bottom, you can see the relationship between annual inflation and basically different measures of money supply. So this chronic budget deficit leading to printing money and increasing the money supply has caused this inflation and double-digit inflation over the decades. We also, Mohammed kind of touched on this issue. Iran, depending on which organization you look at, has one of the most corrupt economies in the world. Probably, if you look at the World Bank, Iran is one of the most corrupt in the region. You look at the corruption perception index, Iran is one of the worst. If I remember correctly, the statistics off the top of my head, I think out of 181 countries listed by corruption perception index, Iran is sitting around 160. Then we have substantial, in the banking system, we have substantial accumulation of non-cash flow generating assets by banks. So this is a total disaster. And then massive rollover losses, and it's rising. And I'll get to these issues as to why this is happening and what we could do about that. Other issues that we are very well aware is that since the first time FATF started publishing its list, Iran was blacklisted. Central bank lacks independence in setting its monetary policy. The clergies are actually in charge of that, so Central Bank of Iran does not really have much independence. The tenure has been very high. It's been close to 2 years. Over the past 20 years, we have had 10 governors of central bank. In contrast, for instance, in Russia, we had only 2. And then on the result of all of this is a complete erosion of trust and credibility due to numerous policy failures. So Some diagnostic about the financial markets in Iran. Iran is suffering from asymmetric information. The financial market is suffering from asymmetric information, insider trading, and corruption. And these two, all of these interact with each other. There are a lot of reports by prominent financial newspapers inside Iran about this systemic corruption and insider trading. CEOs, mostly affiliated with IRGC, they basically capitalize and trade based on their private information at the expense of the public who are not aware of those, interlocking and working of the company. The government price control and intervention, which has been the hallmark of Islamic Republic, ranging from currency exchange market to stock market to commodities. Pretty much any place you look at, government has been directly intervening. One of the reasons that the banking system has been able to accumulate this enormous amount of rollover losses without going officially bankrupt is the outdated accounting standards in Iran that allows the banking system to exploit the current loopholes to amplify or inflate, I should say, their earnings compared to their losses. And lastly, the adherence to Islamic finance. The chart on the right, you see that is the share of the Iranian economy in terms of Islamic finance assets. It's even larger than Saudi Arabia. The result of adherence to Islamic finance, it has ripple effect throughout the economy, ranging from depriving companies from having access to risk management tools, to the central bank not being able to use open market operation the way it's done in the West because of the interest prohibition in Islamic finance. Now, this is kind of a controversial topic. Some people argued when I was presenting this internally that this is no longer a looming crisis. It is actually a crisis ongoing. We're in the middle of it. And it's pretty much a classic example. We teach this in Finance 101. So Iran is going through these three stages. We have the initial stage. You have the persistent government fiscal deficit leading to ballooning of liquidity and money supply and high persistent inflation. And then you have the banking crisis following the accumulation of non-performing loans. On the asset side of the banking balance sheet goes down, net worth goes down, and then you have this vicious cycle. And the third stage, you have the currency crisis. And all of these interact with each other, which will cause the escalation of this situation to go into a downward spiral. High level of inflation and currency depreciation kind of reinforcing each other. And then on top of this, you can add all of these fundamental issues. For instance, Iran has not been able to attract any foreign direct investment. For instance, in 2022, Iran only attracted 0.1% of total FDI, foreign direct investment, in the world. Capital flight has been a consistent issue. About $98 billion that have left the country over the past decade, roughly speaking. Iran has been running a chronic budget deficit, $17 billion. I checked the statistics yesterday. Right now it is sitting at 14.1, still a deficit. On top of it, the central banking system does not have enough capital to intervene the way they used to do that during the previous Trump administration maximum pressure policy. As you can see in the graph, the nosediving is the part when they started actually using the reserves they had when the maximum pressure campaign went into effect. And then as the Biden administration started to run the country, you can see a gradual improvement. But right now they're sitting less than $30 billion. And all of this leads to the conclusion that given the fragility of the banking system, not having enough reserves, rising interest rate by the central bank to fight currency depreciation and capital flight is not really feasible for them. So they are basically going to be stuck between a hard place and a stone. So some short-term risk and suggested policy recommendation. Before going into the details, I need to emphasize that all of the data we look at here, not only my presentation and also my colleagues, these are based on the publicly available information offered by Iran Central Bank and the other international institutions. But as I presented to you, Iran has one of the most corrupt economies in the world. They are notorious for having a very opaque financial system. So these are basically based on what we know. After the collapse, you may go and check the books. It might actually be a lot worse than what appears right now. So the overall objective in the short term is kind of consistent with what Mohammed said: stabilization, keep the system afloat, and running and avoid causing any damage, any further damage. So basically, you've got to control the boat to stay afloat. So one of the major risks immediately after the collapse will be bank run. And this bank run is not going to be limited to one particular bank, because the inevitable uncertainty after the collapse of Islamic Republic is not a typical uncertainty you see during election cycles. This is going to be kind of a political uncertainty with the potential to reshape the entire Middle East and pretty much the global dynamic and the economic, working of the region. So as a result, the bank run, the potential risk for bank run is not going to be limited to one bank. It's going to have a domino effect across the entire banking system. So the policy recommendation to address this is the expansion of deposit insurance. Right now, the banking system in Iran does offer deposit insurance, but it's minuscule. Converting it into dollars is like about $1,500. It's really nothing. So this needs to be expanded, a forced bank holiday, freezing deposit withdrawals. And one important thing that should be done is to hire external auditors to examine the banking system balance sheet, different banks in Iran and their balance sheet, especially during the first and second quarter following the collapse. I'll get back to this point a few times during the presentation, because this is a very important issue. It goes back to corruption and also joining FATF. And another key feature that will show up again and again in my presentation and in the other presentation as well is the signaling component after the Islamic Republic collapses. The Central Bank of Iran does not have any credibility right now, so even if they want to do the right thing, given the situation is pretty bad, they need to make very hard decisions, and these hard decisions come at a cost. Given that they do not have social capital, no one is willing to incur those costs. Now, with the transition government in place and with the transition government having that social capital, it is very important and crucial to communicate clearly and transparently. So clear and effective communication is going to be crucial during that moment, during that period. Another risk is capital flight. As I mentioned a few minutes ago, this is not really a new risk. The country is already experiencing massive and substantial amount of capital outflow, but this is going to accelerate during immediately after the collapse of the regime. So what can be done? Swiftly placing a maximum limit on deposit withdrawals, freezing conversion of investment account to checking account, a halt on fire sale of companies' asset and major change of ownership. Again, I will get back to this. Is also related to corruption by CEOs. They have the incentive to liquidate the asset of the companies they're leading and convert the cash into foreign currencies. Enforce maximum foreign currency limit for everyone who's leaving the currency. Who are leaving the country, and again, effective and clear and transparent communication is going to be key. Another major risk in the short term is currency depreciation. The one issue we got to remember is that the ultimate objective is to move the country towards a free market economy with minimal government intervention. So as a result, this risk should be managed. How we can manage this is first, signal a credible signal to bring about a positive shock to the economy. How that can be done? The transition government must immediately start talking to the West, United States, to get potentially limited sanction relief. Talk to IMF and World Bank. As Mohammed said, we don't have any sovereign debt, so borrow money. Iran has been cut off from that market for over 4 decades. Engage in foreign policy talks with the U.S. and joining FATF, satisfying the requirements they have put forward, and the Islamic Republic failed to comply. So the transition government can send a credible signal that they are committed to provide the necessary documentation to join the FATF. Another major risk is the market crash and the risk of a recession or depression if it goes unchecked. Again, immediately after the collapse, there's going to be inevitably a very uncertain period. And the research on uncertainty is pretty clear, although Mohammed is the authority on uncertainty here, and I'm talking about it. We know when we have high levels of uncertainty, asset values go down, we're gonna have decline in corporate capital investment, we're gonna have bankruptcies and currency depreciation, there's going to be massive panic sell-off of assets, which will lead to fire sale of assets, and all of these would reinforce each other in a vicious cycle and create a downward spiral. And this would lead to drop in household consumption. And all of this is the very definition of a full-fledged financial economic crisis if it goes unchecked. So what is the recommendation? The recommendation is completely halting all trades for at least 3 months, if necessary, 6 months. That means 1 quarter or 2 quarters after the immediate collapse of the regime. This must be done, again, emphasizing on transparency and clear and effective communication with the public and the market participants. So why would this work? First of all, it will prevent panic sell-off. Otherwise, we know when there is panic sell-off, these interact with each other, it creates a vicious cycle and a downward spiral, and will lead cause the asset values to go way below their fundamentals. We would want to avoid that. It will also mitigate corruption and capital flight. It will help with the depreciation of real. It would release the real, the pressure on real to depreciate, because, again, the major players in this market will be the CEOs, mostly affiliated with IRGC. We already know that. They can liquidate the asset, convert the proceeds into a foreign currency. That would put a pressure on real to depreciate. By halting the trades for at least 3 to 6 months, this would be prevented. And lastly, as I mentioned a few minutes ago, there is a need to hire external auditors to examine the balance sheet of not only the banking system, but also all the listed company in Tehran Stock Exchange. Iran is notorious for its lack of transparency and opacity in financial market. This is absolutely necessary to even attract foreign investors so they know what's going on, what the at least reliable valuation of the companies are. So this halt in trading will buy time for external auditors. The other risk is going to be elevated corruption. I've kind of alluded to this up to this point, that during the immediately after the collapse, there is an incentive for CEOs, those close to circle of power, those who have access to information, to liquidate the assets they have, convert the assets they have into foreign currency. And this corruption can have a ripple effect throughout the economy, ranging from currency depreciation to the vicious cycle I talked about a few minutes ago. So again, to alleviate this, halting trades for at least a quarter or two would mitigate this issue. Some other short-term policy recommendation would be to get the country out of the FATF blacklist. I mentioned this before. This is absolutely necessary moving forward. This should be one of the first major things, policy items, if you will, of the transition government to address. Negotiations with the West and the United States to at least partially get sanction relief, and get access to the frozen assets. Mohammed kind of alluded to this. There is no precise estimate. I did some search. It seems like there is somewhere between $100 to $100 billion of frozen assets, mostly, as Saeed mentioned, mostly in China. And lastly, dismantling adherence to Islamic finance. That has been preventing companies to access different risk management tools. It has prevented the central bank to conduct open market operation for monetary policy purposes, the way it's done in modern economies. So this is completely unnecessary to have Islamic finance. As a result, for instance, this Exchange High Council of Iran must be completely dissolved. This is the clergy people basically imposing their religious views on the operation of the financial system. And as I mentioned a few minutes ago, examining balance sheet of public companies by hiring external auditors. And lastly, there must be talks to attract foreign investment. I showed this graph earlier. No, I didn't show this, sorry. This is another one. So Iran, as you can see, has the lowest net flow of capital as a percentage of GDP. It's 0.4%. This is even significantly lower than the Middle East and North Africa average. So Iran desperately needs foreign direct investment, and given the current situation, the corruption, lack of accounting standards, there is no incentive for foreign investors to come in. So all of these policies kind of work together like pieces of a puzzle. Hopefully in the short term we can at least have talks and attract some foreign investors to commit to invest in the country. And as a result, the Tehran Stock Exchange must only open after the balance sheet examination is over, and with the help of these organizations, international organizations that have extensive experience in running exchanges like London Stock Exchange or NYSE. Now, I'm going to shift gears and talk about long-term risk and suggested policy implications, suggested policy recommendation. The overall objective in the long run is to transition the economy, Iranian economy, to a free market with minimal government intervention and a financial system that can provide finance to businesses and households and keep the economy predictable and stable. So the major risk for a developing economy like Iran in the long term is mismanaging financial liberalization. We have several examples in the world that countries on the path to become financially liberalized mismanaged, and it led to full-blown financial crisis. We have Mexico in 1994-95. Clinton administration, with the help of IMF, had to bail them out, and we have the East Asia crisis, 1997-1998. So why would this happen? This is rooted in weak credit culture of developing economies, Iran being one of them. We already know that part of the reason Iran banking system has accumulating these massive rollover losses, part of the reason that the banking system is completely bankrupt, and as a result, the country is experiencing inflation, is these people connected to circle of power obtaining large sums of loans and never paying back. Like Banque Ayande is like a classic example of that. How that can be addressed? Improve the credit culture, proper credit check in the banking system. Banking system must be operating within the Basel framework to satisfy capital adequacy ratios. And the banking system must make sure that the deposit insurance that I talked about earlier is priced correctly so we can avoid moral hazard. So that means riskier banks should pay higher price to enjoy the benefit of deposit insurance. So some other policy recommendation about banking and financial market reforms, the central banking system, modern central banking system is based on 3 pillars: independence, transparency, and accountability. This model should be followed in Iran. The current central bank does not have any of this right now. And one thing that I need to highlight is that all of these policies should not be considered as a standalone policy. These would have to work intertwined with other government institutions, with the budget, with other government agencies to make sure this works. Otherwise, this on its own is not going to materialize. One example is the banking reform. Without addressing the chronic fiscal deficit, none of this would work. So that's like on top priority, which goes back to the budget that Mohammed was presenting. Inflation targeting is a good technique for monetary policy. A lot of countries are doing that. So new government in Iran can do that. The balance sheet analysis and health check of the banking system, as I mentioned before. Most banks in Iran are not in compliance with Basel III, so that needs to be enforced, adopting new and modern accounting standards, IFRS, dissolve those banks that fail to comply and recapitalize those that can't comply and they have enough assets. Some other policy recommendations, these are minor, so probably requiring banks to hold about 20 to 25% in cash so that they have enough safety cushion. The percentage should be a little bit higher for riskier ones. Risky banks cannot offer high interest rate compared to the average interest rate. We can, for a country like Iran, that interest rate does not really work to set the monetary policy, we can restrict the expansion of the balance sheet of the banking system, essentially putting a restriction of the expansion or the growth of money supply. And this has worked for other countries, so this can work for Iran as well. And obviously, we need to reform the bankruptcy procedure. So some guidelines to know how to do this. A guiding principle could be Sarbanes-Oxley Act of 2002 in the United States. This act has its own downsides, but it has a lot of guiding principles that the future of Iran can use. It enhances corporate governance, strengthening financial disclosure, establishing independence of oversight, and protecting whistleblowers. These are some of the items that the future of Iran can use. Then it comes the question of, should the economy be based on banking system or the market basis? As a classic debate. The idea is that neither. We should improve the legal system. To have economic prosperity, the economy should not necessarily rely on the banking system or the market. The empirical evidence on this issue does not show either one is superior to the other. In fact, it shows that how should I say this? Reforming the legal system, enforcing contract, having separation of power is actually what makes sustained economic development. So it's not about banking versus market economy. And as I mentioned before, we need to reform corporate and bankruptcy laws and bring them up to standards. So for instance, we know the Iranian constitution is written after the French civil law. US is after common law. So we can adopt part of the common law that applies to economics and finance and contract enforcement that would help to have sustained economic growth. So basically, it's not really probably not feasible to change the law origin, but we can implement features of the common law that can help with the contract enforcement. Essentially, the legal aspect of business law should be updated toward the standard, not the way it is right now. And finally, in the future, in the very long run, after the inflation is contained, the economy is stable, the government should take action to develop a derivatives market. This is a very important market that would give corporations the ability to manage risk. We don't have that in Iran the way it is in the West. Another issue is to have a debt market, a liquid, deep debt market. The reason monetary policy, part of the reason monetary policy doesn't really work in Iran the way it does in other major countries is that the transmission channel to inflation does not work because the Iran debt market is very thin. So what the government can do is to help develop this debt market. And at the end, the government can also issue shorter-term treasuries to borrow funds. The budget panel kind of alluded to this. At the beginning, it cannot be long-term treasuries because they are very sensitive to different risks. So this is not a concern immediately after the fall. But in the long term, this is something that should be considered. Thanks very much. Now, thank you.